I got to be a very boring guy. All I would talk about was the stock market risk and the bond market risk. And of course, there was a correction coming in the housing market. Now, the bond market's already rolled over and interest rates are heading up. And if you've been in the bond market, you've been taking losses. If you're in a high yield, you've really taken some losses. So those have come to pass. Now, I cheat a little bit because I have a timing model for the real estate business. And that tells us where we should start expecting. It's kind of a warning model. That warning model's been going off for the last 18 months, and we've been basically on a sell signal, selling kind of marginal properties and getting rid of things that we really don't want. So now we're starting to enter the correction. The timing model has come perfectly. The timing is just falling exactly in place. So we've had 7 months of existing home sales decline. Right behind declining sales comes declining home prices. So we're going to be looking for discounts on prices pretty doggone soon. So we've also been talking about higher interest rates. Now, I'm going to tell you that I had a client call me just today. It's kind of like I get these thank yous every once in a while. It just rings my chimes. It makes me feel good. I had a client call me and says, I was not so sure in March when we sold that property. I didn't know that we were close to the top of the market. So now it looks like he caught the very top of the marketplace, and indeed he did. So for the last 7 months, things have gone down, and he caught the top of the market. And he says, now I'm in a great cash position, and I'm noticing prices are starting to decline, and now he's getting excited. So I'm going to tell you, here's what I'm going to say. Most of the time, I recommend that we try and get out of debt. I want us to get our properties free and clear as quickly as we possibly can. If you have not sold your properties that were marginal, then we need to raise cash right now. So I'm going to tell you what's going to happen when we get into a slowdown economically. And of course, Ned Davis has already told us that this is coming. So right now you have a window, and you might even get a window of a little bit of lower interest rates, but you need to have some cash. I'm saying you need to have significant cash position for yourself because you're going to want to buy. So if you haven't been able to put together a good, strong cash position, you need to do that now. So go talk to a mortgage broker and find out what you can get on a cash out refi on a couple of your properties so that you have some cash that you can redeploy in a discount fashion. Because I'm going to tell you, once we get into a slowdown, the underwriting is going to change completely. None of the lenders are going to want to lend you any money. So I want you to get into a good cash position right now. I don't want you to take home equity if you can help it. I want you to take long-term fixed rate mortgages and start getting some cash put together. And whatever you do, do not spend that money. This money is for reinvestment in the real estate business. That's the business that we're going to be putting this in. Now, we're getting confirmation again on a slowdown in the fact that the lenders are seeing the lowest mortgage applications they've had since 2010, since the ending of the great financial crisis. And of course, interest rates have gone up. So I'm thinking that we're going to get a little bit of a window here where rates are going to go down, and that's what we want to capture, because I'm going to tell you long-term rates are going to head up and head up quite significantly. So we're going to have this window that we can do this. Now, my job is to try and tell you when these things happen. Just like my client, he couldn't see the big picture. That's my job. I'm going to tell you when it's happening. Right now, we're not buying anything, but we're going to be buying things in 12 to 18 months. We're going to buy a lot of things. So get yourself in a good cash position. If you want to talk to me about your portfolio or your investment needs or your retirement needs, we offer consultation for that. So my very best to you, and if I can help in any way, let me know. Bye-bye now.